Hey there, it's Coach C, and we are here today with an incredibly special guest, someone who I had to arm wrestle to be able to come onto our show today. Welcome to the Coach C podcast, and today is the inside of the inside information on everything that you want to know about trading. So I had to beg this special guest to come on today, and he's a little bit reluctant. For those of you who are watching this on our IGTV, or if you're watching this on YouTube, I'd like to introduce to you Carl N. And those of you who know me really well, you know who Carl N is. Those of you who don't, you don't know who Carl N is. Should we tell them who you are?
No, let's keep it mysterious.
We're keeping it mysterious, but you can see that on the video, we're in my home office, and on the podcast, for those of you who've joined on our podcast, you haven't been able to see that. So I just really want to welcome Carl to the show today and on the Coach C podcast. I think it's really important right now to sit down and talk about a lot of the things that are happening. There's a lot of misinformation on the markets and stock markets and trading and what that all looks like. And you're seeing a lot of people either get involved in trading or get out of trading, or what does that mean? And Carl is a head trader here in Canada. He works with one of the top 5 banks. And you've been trading for over, well, we won't even we'll tell people the age of you if we do that, but you've been trading for over 25 years.
Over 20 years.
Over 20 years,
right.
Yeah. And you've worked at a lot of the, pretty much almost all of them. There's only a couple you haven't worked at, including an American bank. But Carl is the head trader of bonds and equity here at one of our largest banks. And he has a lot of insight because when COVID hit and everything kind of went crazy and the market started going in insane directions, Carl was in the middle of that. So he's going to give us some information today. There's questions I'm not allowed to ask him, so I'm not allowed to ask him certain things, but there are a lot of questions that I can ask him. And for those of you who didn't know, yes, Carl is my husband.
Right, you gave it away.
I gave it away. I couldn't help it.
Okay.
We've been married almost 20 years, so just about as long as you've been trading. And let's just talk about, Carl, tell people who are listening and people who are watching, what exactly does a bond trader do? What do you do?
Okay. First of all, I want to clarify, and a lot of people make this mistake. Christine said I was head of equity trading as well, which is not true.
I'm sorry. I don't even know what he does.
Yeah, I'm a head government bond trader specifically, and a lot of people get confused about the difference between bonds and stocks. So I do not have anything to do with the stock market. Of course, it impacts what I do, but I don't trade that. I trade government bonds, to be specific. So, what a government bond trader in my position does is make markets and provide liquidity for institutional investors. So, that's generally people who, manage pooled money like pension funds, hedge funds, mutual funds, et cetera, and then governments, insurance companies, all these types of end investor that manage large pools of money. They're going to have a certain percentage of that invested in the bond market, and they need somewhere to go and buy and sell bonds. If you're doing that with equities or stocks, you're doing that directly on a stock exchange. But if you do it in fixed income securities, you go to a dealer that's typically an arm of a bank. So what I do is buy and sell securities or bonds specifically from these institutional investors and use the bank's balance sheet to do that, so that they can transact and serve the needs of their actual end investor.
Yeah. And I think it's really important because people think that they confuse stocks with bonds, right? So you have a lot of people that will ask Carl, we'll be out for dinner and they'll say, what's the market doing? And they're referring to the stock market. But right behind that is actually really bond trading industry and the bond industry. But tell me a little bit about, you sit in front of screens all day long, and we have screens set up here for COVID. But you sit in front of a lot of information all day long. How do you determine what to do with the markets? Like, how do you determine what you're selling, what you're buying, how you're trading? What kind of information do you use to make those decisions? And these are big decisions.
Right. I mean, that's a very complicated question. I mean,
Sorry.
it's okay. I mean, I basically use everything that's available to me. So, I mean, uh, all the financial markets are related, right? So, in a typical relationship, people would always think that, when it's a so-called risk-on market and things are going well, people are buying stocks, selling bonds. They're all related, but whether it's commodities markets, um, foreign exchange markets, bonds, stocks, for that matter, real estate, it's all interrelated. And what we do really is try and assess all these, global macro markets and try and make the best decision for the bank as far as how we'll position. And also very important to that is the supply and demand equation in our market. So how much issuance is there, and what do our end investors need to do? Do they need to buy or sell? So we try and take all these factors of what global markets should do, and what are the needs of our end investors, and what is the supply demand profile of a market. And we try and assimilate all that and formulate a trading strategy that we can best help those end investors. Really,
Yeah.
that's really our number one job. If we're serving the needs of our customers, then obviously that's how we grow our business. But so we take all that info, try and best position ourselves to try and help the end investor.
And I think I heard this quote so many times this week: everybody has a plan until you get punched in the face.
Yeah,
And
I love the quote.
I love that quote. And you were on the front line when the markets got punched in the face.
Right.
And I watched the stress levels of your colleagues, all of that uncertainty. Because when you're trading in times because you just said it, you have a lot of information, and you structure that in a way that you can make educated decisions on what you're going to be doing. Well, when none of those levers and things make any sense, because what's happened in the last 8 weeks has never previously happened in the world.
Right.
So now what? So you were in the middle of trading when COVID hit, and the chaos in those structures. What you would think would happen was the exact opposite. So can you say a little bit about what you rely on then in terms of your ability? Like, what do you do then?
Right. I'm in a unique position when crises hit, in that essentially what I trade is ultimately ends up being the product most in demand.
Right.
And so, when we see this start to evolve, and you see a lot of money moving out of riskier instruments like stocks, and like corporate bonds for that matter, and they want to go into government bonds. They want to go into the safest instruments. So, really the best thing we could do is just try and keep ourselves long the market, as all of our end customers would come in and need to buy. I mean, one thing I'd clarify about my job is, people ask, oh, do you make a commission on what you do? We don't make a commission on what we do. What we do is we provide liquidity. We try and have a bid ask in the market on what we do, and the market moves. So we may sell bonds to a customer, and we get short the market, and the market rallies against us. That can happen. That happens all the time. So the best thing we can do is sort of anticipate what people need to do. And rates move tremendously. We haven't seen this kind of rate movement. For that matter, we haven't seen this kind of financial market movement since the financial crisis of 08 and 09. So there's a tremendous rally in bonds. If we take, and there's a lot of central bank intervention as well. So you had to anticipate that central banks would move rates lower, that end investors would need to buy a lot of government bonds particularly, and there would be a flight to quality. And that's really how we try to position ourselves for what the markets and customers would need to do. Right. So, as we moved along here, there's become a great central bank presence in these markets, and they're heavily influencing what's happening in here.
Yeah, can you tell us a little bit about that? Because there has been a lot of bailout programs, government programs, a lot of the government's putting money into the economy. How do they do that? Because I know they rely heavily on guys like you
Right.
and traders to be able to create that. Can you explain that to people? Because I don't think people really understand what it means when the government creates these kinds of programs.
Right. Yeah. So I'm in a unique position where we are a primary dealer. So what we do is we have an obligation as a primary dealer to participate in auctions led by the Bank of Canada to buy Government of Canada securities. So obviously the Government of Canada has a budget. They have to finance themselves. They run a lot of debt to do so. And the Bank of Canada administers their program. And so the Bank of Canada sells bonds for them and money market instruments to fund the government. So essentially what's been going on since this crisis has started is, the Bank of Canada fundamentally has a mandate to keep inflation stable. That's their number one focus, is to keep inflation stable.
Right.
Obviously, that's very difficult in this particular time. But the other thing they need to do is, they have a lot of jobs, of course, one I just said, which was to, help the government fund itself, but also they try and help the functioning of the markets. So they see markets come under a lot of stress. So they start using their toolbox. They have a monetary policy toolbox. And so they cut rates. So when we started this, they had their key lending rate at 1.75%. Over 3 cuts, they've taken it down to 0.25%. So, it's almost zero, basically.
Right.
And then they've gone into their toolbox in a multitude of different ways to support financial markets. So they're buying all sorts of different types of securities and paper in order to provide liquidity and help the system function properly. So they're buying Government of Canada bonds. In fact, they're buying 5 billion of those a week. They've announced that they're going to buy 50 billion of provincial bond paper. They're buying 10 billion of corporate bonds.
Mm-hmm.
They buy money market securities like commercial paper and bankers acceptance notes, which are short end pieces of paper that companies use to fund themselves. They provide lending facilities to the banks, and basically all these programs are meant to make sure that financial systems keep functioning properly.
Yeah.
And that in times of stress, the banks and investment dealers, their balance sheets and what they do comes under stress too. And so what the Bank of Canada does is help facilitate what they're doing and allow them to keep their core function. And that's what's going on right now in very large size, really.
I find it really interesting because essentially, and you've said this several times to me, and it's like they're printing money.
Right.
They're really printing money in, and there's a cost to that overall from an economic perspective. But pretty much every country is doing the exact same. They're using the same policies and they're all printing money because essentially when the governments release that, or they drive up inflation when they print money. Like they devalue currency
Right.
and they drive up inflation.
Right.
So, which you're very familiar with, obviously, you trade inflationary bonds. Say a little bit more about, if one country did it, it could be really bad. But since all of the countries are using similar economic tools, that what does that mean for on a more global or national perspective?
Right. I mean, basically what all of the governments and their central banks are doing is effectively printing money. So, they've increased tremendously the size of their borrowing program. So every week, the Bank of Canada comes in and issues more bonds than they traditionally did, and more treasury bills than they traditionally did. And then at the same time, they turn around on a daily basis and buy Government of Canada bonds. So like I said, on the one hand, they issue them. On the other hand, they buy them back. Off the run, illiquid bonds is what they're really ultimately trying to do. But so, they're issuing bonds so the government can fund all their programs, all these fiscal stimulus
Right.
programs that they have. That money, when they issue, goes to the government, and they can go through all these lending programs, et cetera, that they're trying to support people with. And then the Bank of Canada comes in and uses its own balance sheet to buy securities and tuck them away on its balance sheet, which is increased like tremendously. I don't know the exact number, but let's say it was 100 billion before, now it's 350 billion or something like that. So, in a way that's like printing money, because they're issuing at the same time as they're buying, and that money, the issue goes to the government. So, and they can use the program. So everybody, all of the banks and central banks globally, at least in large developed nations, are doing this to support their economies, to help it fight through this crisis. And, it doesn't help solve the problem itself of COVID-19. It doesn't help, obviously, find a solution for a vaccine, but it hopefully allows people to kind of survive and get through. Because obviously there's been tremendous financial damage done to individuals, to businesses, and it hopefully helps people just kind of get through this process right now.
Yeah.
And to answer your question, if a country is issuing a tremendous amount of bonds and printing all kinds of money, in doing so, what it's doing is devaluing their currency, because it's a lot less valuable, of course, if there's more of it out there relative to other currencies. So if Canada was the only country doing this, the Canadian dollar would go down tremendously. But the truth is that all, developed nations are doing these types of programs. So it's not in particular difficult, on Canada in doing this, because they're all doing it. In fact, they're coordinating. There is like G7 central bank coordination in these programs.
Yeah. So it all comes down kind of generally.
Yeah.
That's right. Makes sense. And I'm getting a lot of questions, and I'm sure you get a lot of questions too, because a lot of people are, what can they do to pivot? What are the things they need to do in their business? And some people have picked up trading, day trading. And people say to me, "Oh, you're married to a trader." And I'm like, "Yes." And I'm not allowed to tell you anything about what he does, although I am putting him on my YouTube and my podcast today. But tell me a little bit, because I think people confuse what day trading does, and a lot of people are trading, foreign exchange currencies, they're trading stocks, and they're trading bonds. Tell me a little bit more about what they're doing versus someone who is trading institutionally, like you do.
Okay, I mean, what I do really is trade billions and billions of bonds a day, to facilitate transactions in the market, to help people move money around into bonds, out of stocks, etc., and vice versa. So, I mean, that's what we're doing. We have to use a lot of, say, bank balance sheet to do that, to be able to do that. We need a lot of support around us, of course, to finance our positions. So a lot of people are, coming together to do this. And also, frankly, like this is the way through the bond market that a lot of people fund themselves. Obviously, not just the government, though. There's not just provincial governments, but corporations. So and
individuals. I mean, people have bonds in their portfolios. So your wealth manager will have a kit of tools they use, right? So, yeah.
So I mean, what we do is help that all kind of function. But if you're an individual kind of retail investor, there's a lot of hedge funds out there that are day trading and using like billions and billions of balance sheet as well to do that. But trading very large sizes. But let's say on a retail level, I mean, you don't really tend to trade like a cash bond retail wise to try and day trade the bond market. You'd have to use a different type of instrument that would give you a little bit of leverage in the market. So you could actually kind of put more money to work for your dollar. And there's different ways to do that. You asked me about ETFs. There's these leveraged ETFs that maybe could give you a multiple of the market of 2 or 3 times, or you can actually short the market, which can be difficult for a retail investor to do. But if you can buy an ETF that is a short of the bond market, say 2 to 3 times the value of your dollar, then you can actually catch market moves. Or traditionally, what a lot of people would do is use futures markets. You'd have a futures account, and you could trade futures and options on the bond market, and that'd be another way where you could put up, say 10% of money to get an investment in being long or short the market through your futures account. So I think they're generally going to use either fixed income futures or fixed income options, or leveraged ETF products.
Okay. What's the number one question people ask you when they want information? So what do they often say to you in terms of what should I do? Because I know you get this question a lot, but what's the number one thing people will ask you about trading?
Well, the number one question people ask me is, do I have any stock tips?
Right.
And I don't. I don't have any stock tips. I look at like global economic factors, global macroeconomic factors, particularly Canadian ones, and that's how we trade. We have no interesting information that way. I'm looking at all public information that I just look at it very closely.
Yeah.
So people often just want to know the simplest thing. What's a good stock you'd recommend? And then when I tell them I don't do that, they're like, oh, should I buy bonds? And the thing is, people don't always appreciate how the stock market sounds interesting and sexy, and you get to buy Tesla or something like that, and that sounds exciting. And that's been a great investment, owning Tesla. Although
for some reason.
Although, mind you, with oil trading at near zero, it will probably bring into question how much we need to spend extra on electric cars. But anyways, people will ask me, is it a good time to buy bonds? And should I have bonds in my portfolio? And yes is the answer. I mean, I looked at, I think last year, like if you had a provincial bond portfolio in Canada, you would have made like 20% or something like that. And that was last year. And there's been nothing better performing than throughout this crisis than, stocks might be down 25% or something, but bonds are up 25%.
Right.
I don't know the exact number if I'm being honest with you, but they've had a tremendous rally. So is it a good time to buy bonds right now? I mean, rates are very low, and rates are low. That means you're gonna get a lower return, certainly.
Right.
But it's safer. And I'm a government bond trader where the rates are the lowest. But I mean, you can look at corporate bonds that have returns that are a couple hundred basis points over what a government bond is, and I'm sure there are some excellent opportunities there. I'm not going to get into trying to recommend it. That's not what I do.
No. And I really appreciate that. So I think it was really helpful for a lot of people who will listen to this and watch this to understand the differences, because I think people are very confused about what to do and, what are the differences in the market and what are those levers. Number one, they hear government bailouts, they're hearing, printing money, they're hearing inflation, and they confuse that with the stock market. Everybody's talking about the stock market and what to invest in, but the reality is it's much more complicated and complex than that. And for companies who are leveraging, stocks and bonds in their own businesses, there's a lot for them to attend to. People are at a heightened level of fear right now. People are looking at, what do I do with my business? And everybody's saying cash is king. So when you hear that about, people looking at, there's two sides of what we're seeing, what I'm seeing in businesses, and people are either paralyzed by fear or they're taking advantage and looking at the opportunities. And those that are taking advantage and looking at what I'm going to invest in, what's the opportunity? Is there anything that, and I know you're not really someone who can predict the future or the markets, but is there any industries that you can say, that you would, consider they will rise through this at a faster rate, or they'll have a better chance of coming out of this? Are there any industries that you see would be interesting?
I don't know if I'm going to have an easy time answering that, honey.
Yeah.
I mean, I think
it's a tough one.
Yeah. I mean, it's all timing too. Like if we are on the brink of turning the corner on all of this, then, if people have been putting their money in medical equipment companies, that's fine. But some of the stuff that's been particularly beaten down,
right.
Retailers, automakers, etc., airlines. Airline traffic is down something of the nature of 95%.
Yeah.
If they can actually survive and not go bankrupt,
then Richard Branson, just like, he's really fighting to keep his company Virgin alive, right? They're on the verge, and there's so many airlines that are going in that direction. So it is, I think I asked a really challenging question, because I don't think there is an answer.
Yeah.
To be honest.
I mean, I'm not going to try and recommend any sector or anything like that. I mean, I find it very interesting that, the one thing that seemed kind of clear to me is that those largest tech companies, I mean, every company gets dragged down. Every company gets dragged down by what's going on, of course. The economy is, running on whatever capacity, what it was surely down 25% or something like that. But, I think like the demand for technology is frankly seems higher than ever.
Yeah.
And as we were talking about last night, these FANG stocks, the Facebooks, Apples, Amazons, Netflix, Googles, I mean, the demand for what they do, we aren't out there in the malls and at the stores doing things like we were before. And the demand for what they do and even just like network capacity utilization is bigger than ever. So, obviously their stock prices reflect that. Netflix would be at its highest all time in spite of what I think Amazon as well. Again, I'm not a stock guy, but so markets are well ahead of that. They already know that of course these companies are most in demand. So that doesn't make them a great investment, but it just certainly displays like how even moving forward how important these biggest companies remain.
Now, I'm going to switch gears a little bit on you, Carl, and I didn't ask your permission to do this, but you've been trading for a really long time. And right now, a lot of people are looking at, they're taking the opportunity and you've been working through this whole time because, the banks need guys like you to keep the economy moving.
Right.
What have your thoughts been on your own personal reset? Because a lot of people are taking this opportunity and I've been saying a lot, use this time to reset, use this time to make a pivot. What purpose are you serving? What are you up for next? What's your what's next for you, and really reinvention. And I talk a lot about that. And I don't think I've ever really asked you, what do you think, if you, had a timeline of when you wouldn't want to trade anymore and when you wouldn't want to be in the heart of the, in the heart of it all, what would your what's next be? What would you want to reinvent? What would that look like?
You really chose this medium to ask me that question?
Yeah. I'm putting him on the spot completely. I'm sure you've thought about it.
Yeah. Can I abstain from this?
Yeah, you can. You absolutely can.
Yeah. I mean, look, I don't know right now. It's really interesting times in frankly in what I do. It's very interesting times. We have people. I don't work out of our main office anymore. I work out of a so-called business recovery site. Right. And then some people are in the main office. Some are where I am. Some are just at home. An increasing number every week are working at home, and it's made for some interesting times and changing a little bit the way we do our business, the way we communicate with each other. And that's all been pretty fascinating right now. And it's, I would say the job's been particularly interesting throughout this. It's a terrible time, but at least I'd say actually trading these markets has been quite a good experience. And certainly it takes your mind off of all the bad stuff going on out there around COVID-19. But so I don't know right now what the what's next is.
No, I think you said it. I actually think the reset is maybe there's a renewed passion and a renewed fire. Like you've been doing this a long time. For some of us, it's reminding us of why we do what we do, and that is a reset. That's like getting more excited to go to work every day versus being flat, or it's not the same thing as it was. It's not the same old. So there's a lot of excitement there, and that's a reset in and of itself. And I think we don't want to take that for granted, because people think, oh, a reset means I have to do something different. No, it just might mean you have a renewed passion for what you are doing, and that you found your purpose early on in life, and you've been able to do that and to continue to do that. And that's exciting. And I think a lot of people hearing your message of you've really been challenged by this, and that's exciting for you and interesting, because some people are struggling with that. Right. Or, maybe there's less complacency.
Yeah, it has been exciting. And, I look at on my team, we have people working out of 3 different centers. That's interesting. People, on the broader team, people working out of multiple locations, obviously a lot of people at home. I have the capability of working at home now for the first time in my life, and it's making me, it's making me think about. I have taken over the dining room. It's making me think about, what's next. What's this all going to look like? Because, are there going to be more people working at home than there ever were before? Are we going to do more Zoom meetings as opposed to flying places? Like how much will business travel ultimately be down? Will we have less office space? Will our office space be socially distanced permanently going forward? I mean, I don't know, but I mean, there's a lot of interesting factors to think about, and clearly we're not going to look the same that we did, in Q4 2019. We're not going to look the same in Q4 2021 or 2. It's just looking forward. I mean, I think there's going to be some permanent changes out of this, and different ways of doing things. So I mean, that's all interesting to think about.
What is one of the things from a leadership perspective that you have seen some of the leaders of the banking systems do really well? Give me an example of something that you noted, or it could have even been yourself in your own leadership position, but what's something that you noted that kind of really resonated with you as something positive and powerful?
I mean, I think that, at least I mean, if I speak a little bit more about my business, they've done a good job of separating us, socially distancing us in our work, bringing forth the technology so that we can function. We're used to kind of working elbow to elbow in our workplaces, and the way we communicate is obviously a lot of like yelling across the floor to each other and all that. Whereas now it's a lot more over hoot and holler boxes and phone conversations again, a lot more just digital instant messaging, etc. But
which a lot of companies are faced with.
Right.
Whether you're on a trading floor in a call center, you have a customer care center, or maybe you're an insurance company, it doesn't matter where. All of your people were used to a structured system of going to be at work together and then communicate that way. And all of a sudden that's completely disappeared. And that's challenging for people. And I think leaders are either rising to that challenge and they're helping people get through those things, or they're forgetting maybe some of them are even forgetting some of the softer skills, where it's like, acknowledge your people for something extraordinary.
Right.
What really great thing can you acknowledge people for during this kind of change? And that's what I'm looking at in terms of a leadership, purview. What are some of the great things, and what are some of the really stupid things that leaders are doing? Because a lot of leaders are bombarded with their own emotional responses, and they're kind of, maybe not necessarily helping in certain situations. So, that's kind of what I was asking.
Yeah. I mean, I think, it never happens quick enough, of course. All these things take a little bit of time. And unfortunately, in some cases, that probably perpetuates the problem. But, I just, in my business, I just have seen, people have been very good at communicating the plans and moving it forward as quickly as they can.
Yeah.
So, I mean, I don't know if I would point out somebody who's particularly stood out throughout this crisis, but I just think the key is to really communicate with people, and just so people aren't left with uncertainty. I mean, I'm fortunate enough that we get called a so-called essential service. The group of people that I work with directly, we all are able to stay employed throughout this and not get furloughed or laid off.
Mm-hmm.
Obviously, certainly people in banks are going through that as well, amongst other parts of the economy. But, and so people are going through tough times, but the key, I guess, is just see these leaders really communicate.
You touched on something, and I want to unpack something a little bit further, because one of the things we started and we talked about was the government is raising a lot of money and helping people, and they've got loans and things happening. And you're trading all of that stuff, but do you think that it's actually getting into the hands of the end consumer? So if they cut rates, mortgage rates should go down. If they cut certain things, certain economic factors should happen. Do you see that happening?
It's tough. I mean, when times get tough, that's when banks want to retrench, like if times are great, they'll keep expanding their credit. They'll lend more money. That helps the economy grow. They're confident that people will pay them back. So they'll do that. But when you have the financial crisis, when you have this COVID-19 crisis, banks would naturally want to retrench, right?
Yeah, well, they have a profit. They're profit centers. They
Right.
have a profit to take care of as well. So the government can say, yeah, we're going to help all of the entrepreneurs and the business owners and all these people. But if the banks have to watch out for their own business, that doesn't necessarily get done at the consumer level.
Right. So, what all this does is keeps the banks liquid, keeps them able to perform their function. Is it a perfect transmission mechanism down to the end consumer? No, not at all. But it is all helping. I think, like the government programs, they take time to roll out. People have to learn how to actually access them.
Yeah.
People have to, go out and do that. And once they're announced, how many weeks does it take to implement it? And
a lot.
I mean, there's a very high number of Canadians, when I've seen the stats, that kind of live month to month on their paycheck.
Yeah.
So if they had a 1 month interruption, I don't know the number, but it's far higher than you think. It's awfully close to 50% who would basically couldn't make their payments if they had a 1 month disruption in their income. So, the government has rolled out some significant plans. The Bank Canada, through monetary policy tools, is doing some significant actions to keep the financial markets functioning, to keep banks, encouraging banks to lend, to use their balance sheet to give people money to help them get through it. Is it perfect? No, it's not. Yeah. It's not. But no. I think we're doing the best we can. At the end of the day, like you said, banks are businesses, and they do have to watch out for their bottom line, and they can't just give money to people who probably aren't going to be able to pay it back. So the government really has to be the last resort here to make the economy function. Yeah,
and I think but I really appreciate that perspective, and I think being authentic and honest about what is happening for people and not sugarcoating it. There's a lot of people who are suffering. There's a lot of people who are in financial challenges right now, and at some point, hopefully we can all rise out of that together. There's a couple other quick questions I wanted to ask you while I've got you in front of the camera. Mm-hmm. And for those of you who are watching and those of you who've listened to the CoachC podcast, you'll know that I'm a neuroscience coach. I'm a master coach, and we use a coach-based approach to consulting in our business. And I don't coach my husband. So we have a rule that I'm not his coach, and I don't, right? And, and there's a reason for that. You shouldn't coach your relatives. They can't hear you the same way that a paying client would hear you, and he just thinks I'm nagging. So the reality, though, we think very differently. So those of you who know us or are just meeting us for the first time, you can tell that Carl is very analytical, very left brain, very much thought oriented and very factual. And I lean a little more to the right. I do have some left brain leanings, but I am a little bit more right brained in my thinking, probably more spontaneous, a little bit more risk taking. He's more conservative than I am. What do you think, and that actually makes for great partnerships, by the way, not just in marriages, but in business. When you're looking to get into a partnership, if there were too many, right brain, big vision people, let's try this, let's try that all the time in that business, it will fail quickly because you don't have someone saying, whoa, slow down, stop, wait a minute. And then the corollary is true when you have a partner in a business or in relationship where they're like, if everything was stop, slow down, and very risk averse, that company might not get off the ground, or you might not pivot and take the right business decisions. What's your biggest challenge, living with someone who thinks very differently? And what do you also appreciate about living with somebody who thinks very differently than you? Not very differently. We're pretty aligned in a lot of the way we think about things, but we're very different in our approaches.
Right. I mean, we're different. We are. I mean, I'm kind of more slow and measured and practical, and really consider the bottom line sort of thing. And you're definitely more like big idea, push, let's go for it, type approach. What's next? Like, I mean, you're consistently trying to, really propel us forward. And sometimes I'm trying to like put on the brakes because, maybe it doesn't work financially to jump forward like that, and you're like, just consider the possibility and we'll try and figure it out, so it's where it's pretty fascinating. And no, we are absolutely different. And it is a bit of there is a balance there though.
Yeah.
That we are kind of on it's like yin yang sort of thing, right?
Yeah.
And but it works. And I think if there was two of me, it'd be a little more boring around here.
Well, there wouldn't be an around here. You'd be in a very different home.
If it was two of you,
it'd be a crazy town.
God knows.
I agree. So thank you so much for agreeing to be with us today. And I really appreciate you jumping in. We're looking forward to the next CoachC podcast. We are going to be speaking with our HR consultant, José Laroque-Taton. And she had to pivot a couple times this week, so we weren't able to bring her aboard. She did have some COVID cases that she needed to take care of as an HR consultant in her business. And so thanks again for listening and watching for the CoachC podcast. Those of you who are on the Daily C and the CoachC, this is a surprise inside look at what does it take to really make the economy stabilize. And this is the guy who's been making that happen on one of the teams in Canada. And I'm just really grateful that you did that. So thanks.
And all opinions were my own, not my company's.
Yes. Disclaimer. We also didn't say the name of his company, but those were his own opinions. So thank you. Thanks for that.
You're welcome.